Good evening, everyone. Good evening, everyone. Welcome to the market wrapped up for 13th of May. Risk statement. Please note this is not an advice or recommendation or any influencer program to encourage you to go ahead and start trading or investing based on this advice. This is just a wrap up to conclude on the observations made on the market today and present you my version. It doesn't mean that you have to follow it. It is always recommended that you exercise your judgment based on your analysis and as well as verification of the data and the views presented. Thank you. As always, this edition again focuses on Indian stock market based on NSE and BSE, and reiterating again, you are advised to exercise caution and you are mandated to verify every information before taking any action. Going inside our analysis today. Summary. Today was a bearish market. Nifty lost close to 1% and there were some extended losses, but it was not huge. So as you see on the charts, we did not have a complete engulfing of the bullish move, and as you see here, it's roughly around 1.39% of downward move that we saw. Mind you, reminding you again, yesterday there was a 4% up move, and today was 1.39% down move. Let's go in further to see how the market was today. I'm going to open a 15-minute chart, and these are some of the analysis I use. So the blue lines here reflect a pivot point, and as you see, the market predominantly remained within the pivot point, and it did respect the first support. The first support was at 24,554 and it did respect it and it did not cross below that. So there have been a few questions around statistics, this line graph, etc. from users. So today I would like to clarify that these are traditional methods used on technical analysis. The support levels and resistance levels and pivot levels are a formula based approach people use to statistically mark the points of breakdown or the points where a change could occur. You can read more about it, but predominantly what we have seen is there is a decent amount of stability in these calculations, and the market does react, and there is certain amount of trust you can keep on it. Not always, but as I said, most of the times it does respect these levels. Great. So I would like to bring you to one observation which I did, was that it was not a trending market and it was moving predominantly sideways, typically between the levels of 24,849 and 24,666. Because of yesterday's up move, and which was also combined with a gap up opening, we are seeing this as a sideway. But in a normal market, a 300 point move is usually a good market and a good move, right? This looks sideways, and definitely the initial movements were already concluded by 10:15, and that is within the first 5 candles. Majority of the move was done, and then it was a slow paced downward move. That's what we saw. Right. Bringing you to another perspective. If you see here, the market, the red candle for today has not breached the previous green candle from yesterday, which moves, which shows that market is probably in a consolidation mode unless there is a big event or something that is to happen which will cause a downward move. Prediction is always not possible. No one can exactly predict what the market will do, why a market does something what it does. But two chances which comes up here is that it could consolidate further in this channel, means every day the movements will be between these lines within this 300 points, and it will consolidate until a breakout is seen, or tomorrow we may have a breakout either on the top side or the bottom side. This is also validated by the shape of these Bollinger Bands, which are showing that it's in a consolidation move. It is very normal to see this kind of a move because after such a move yesterday, consolidation is bound to happen, and unless there was a huge bull run where today also, if there would have been a gap up movement, then the Bollinger Band shapes would be different. Pardon me for multiple Bollinger Bands here. I use +1 sigma and +2 sigma to monitor the price movements, but if you go by what I'm seeing, you see that the fluctuations have been between +1 sigma and +2 sigma, and it has not breached +1 sigma, so which is a good sign. We have to wait and see what is there for tomorrow. Right. Key conclusions. Today was a bear market. Bears made money, and as well as option sellers made money. We will come into further observations on that. But today, option sellers made money because it was a Sensex expiry, and option sellers on Sensex did make a decent amount of money. And because it was a downtrend, people who bought put options also made good amount of money. Now let's look at Sensex. Sensex followed a similar pattern as Nifty 50, and no much analysis on Sensex because we have already covered it in Nifty 50. However, Sensex was quite volatile today as compared to Nifty 50, and that is probably because of expiry. When I speak about volatility, I meant about options and pricings that moved quite a lot because it was quite sensitive because of it being expiry today. So this is what the Sensex chart looks like. As you already saw, it is very similar to the Nifty chart. So let me show the Nifty chart for you as well, so it's helpful. Moving on. Top gainers for today. The top gainers for today were Tanla Platforms, Bharat Dynamics, Vishal Megamart, Inventress, Afcons Infrastructure, and Chevrolet in India. No specific sector based movements I could see unless someone has spotted something else. Let's also look at the losers for today. KFin Technologies has been on the top. KFin Technologies, an observation that this company has been on the losers list for previous week and this week. I'm also seeing Jyoti Laboratories as well on the losers list. So something that you may want to look out and be aware of. Right. Let's look at stock heat map. Because it was almost a 1% down move, you could see everything is in red, barring no specific sector. Uh, Distribution services is one sector which was in green, and some amount of health technology because of the relief we got from the statements made by Mr. Donald Trump. Uh, there is some hope. Yesterday, pharma sector fell a lot, and today it has recovered a bit. And hope some concrete news has come across for us to make things better. Right. Let's move to the winners. In Nifty, these are the two specific options where we saw the highest amount of appreciation. 24,900 PE option today saw an appreciation of roughly 112%. It opened at 200 and it closed at 368 with the highest point being 408.25. The next option that actually made a real good appreciation was the following option of 24,850. Opening was at 174.85 and topping at 367 and closing at 331. Both of them roughly 112 to 114% of return on a day basis. First option being 82,000 PE. You need to be very accurate to get these things or profit from these things, because one wouldn't have expected that it would exactly come very close to 82,000. 81,000. However, let's see the numbers. It opened at 282 and it closed at 852. The topmost point being 991. That's close to 229% of appreciation in one single day. Similar to that, we have 82,100 PE. Again, as I said, you need to be extremely accurate to get these kind of returns. But however, we could easily spot quite a few put options topping 100% today. It opened at 315 and closed at 951, generating 227% return, and the highest being 1086 points. So that would have been close to 240%. Let us look at the stocks whose earnings update etc. has come today and will also be coming tomorrow. Thereby you could see some movements in these stocks. Some of the prominent stocks where the results are on 13th of May are HAL, Eicher Motors, Tata Power, Shree Cements, Lupin, Muthoot Finance, Torrent Power, ABB. One key observation to be made is Torrent Power and ABB, the volumes have been constant. So watch out. Shree Cements is a very high price stock. The liquidity could be quite less. Some of the stocks which probably would be interesting, watch out and identify opportunities are HAL, Tata Power, Muthoot Finance. Let's look at S&P 500. This is of course a US index that we are watching, but just wanted to point you out that US 500 has been consistently going up. This is a day chart, and yesterday we saw around 3.2% appreciation, very similar to the Indian market, and today the futures are also trending higher. Let us see gold. Gold, an important indicator. Gold is seeing a drop, possibly a good time to accumulate based on your risk appetite, because gold is one asset class which has constantly seen an uprise, and as you can see from the charts, you can see just nothing but up move over a period of time. mind you that a double top was formed and then it has come to the neck level. The next few trading sessions could give you an insight as to where it is heading, but if there was any more uncertainty that you foresee or predict, then possibly gold is a good asset class where you could start investing. Yesterday there was a 4% rally. The market moved up by 4%, but the buy figure or the cash buying figure from FII and DII put together has not crossed the net buying on last Friday. What I mean by this is Monday we saw the stock market really going up. Despite that, FII bought for 1246 crores and DII only bought for 1448 crores. But as compared to the Friday figures, DII's net buying was itself at 7,278 crores, and despite that we saw the market falling. And of course, FII sold for 3,728 crores on Friday. What needs to be noted is that despite a 4% rally, we haven't seen much of a cash buying that should have been recorded. One other counter I would like to highlight you on is Yes Bank. Yes Bank recently has seen some new shareholders stepping in, and because of which there is some positive sentiments that is coming up on Yes Bank. If I exclude the yesterday's rally, which as I would say that it is not really fundamentally driven or technically driven, what you could see is that the stock has moved up by 2.25% post the news, and looks like there is some fresh interest in this counter. So this is something that you could watch out for, and that actually concludes our market wrap up. And